Hello and welcome. You're watching us here on CNBC-TV18's new programming. It's called Your Stocks. We answer all your stocks and investment related queries. I'm Manglam Malu. Well, before we do that, a quick look at the markets. We're actually doing well, not too bad from the market standpoint. We're holding with a cut of almost 50 odd points. A couple of stocks not doing too well. But, after a long rally that we've seen over the last few trading sessions, this was just par for course, so to say. The good part is that we are finding support at lower levels. Even as the higher levels, there is some sort of exhaustion. We are holding around that 17,900 mark. Low of around 17,820 to 830 is holding on for today's trading session. Joining us today to answer all your stocks and investment related queries are Ruchit Jain, who's the lead research at 5paisa.com, and Sharad Avasthi, who's the head PCG Research at SMIFS, to answer your queries. Sharad, Ruchit, thank you so much for joining in. The first one comes in from Chennai. K. Sivananda Devi calls us. Hi, good afternoon.
Yeah, good afternoon, Mangalam.
Good afternoon.
I hold Bank of Baroda 30 shares at the rate of 166. And Coffee Day I purchased during IPO 45 shares at the rate of 328.
Okay.
I have been holding these stocks for a very long time, so I just want to know the outlook for these two.
And these are stocks that you bought for the long term, and how big a part of your overall portfolio are these stocks?
Yeah. It is some of the stocks in my overall portfolio.
Okay, and how much do they account for in your overall portfolio?
A fraction only, not
a fraction only. So if it was advised that you exit these stocks on the losses that you're making, it would not make a big financial material difference to you. Is that correct?
Yeah, but the thing is, I won't get any amount also if I sell those stocks.
I completely. I sympathize with you here. Well, Ruchit, Coffee Day Enterprises, I'm not sure if Shekhar tracks it. Our viewer, Ms. Simaranda, has been stuck in both Coffee Day as well as Bank of Baroda. Is there any chartical respite in sight for her for both these stocks?
So frankly, not in Coffee Day at least, because if we see that the broader trend for Coffee Day has been negative, and even during the recent price up move in between which we got during the month of January, at high levels again we witnessed some selling pressure. So the mid to long term charts are also not that attractive that we could predict some big up moves from current levels. So my advice would be to exit from Coffee Day. Although the number of shares are small, but still there are no probabilities, the probabilities are very less that the stock would become a multi-bagger or show any significant up move. I think within this space, CCL products could be looked as an alternative, where in case, if she wants to invest more money within the sector itself, then CCL products could be considered for fresh investment. And Bank of Baroda could be held on. Recently, we have seen a good buying interest in the PSU banking space. Although the short-term charts are overbought, but from the mid to long-term perspective, I think the price-wise correction is behind in many of the PSU banking names such as SBI, Bank of Baroda or Canara Bank. So Bank of Baroda, the downside seems to be very limited. In between corrections could be there because of overbought readings, but that too would be only in short-term. The mid to long-term charts are quite positive and can expect target somewhere around 150 to 160.
All right. We have Sharad with us. Sharad, you cover Bank of Baroda at least, right?
Yeah.
So can you advise our viewer here?
Yeah, I think as already said by the earlier panelists, the PSU banks have a lot of scope of improvement according to us also, because the way the government is pushing for the capex growth, that will lead to a lot of demand for corporate loans, and PSU banks should be in a sweet spot to benefit out of that. The last 3-4 years, the turmoil that we have seen have led to the balance sheets being much more cleaner. The merged entities are much more stronger and larger as well. Even for Bank of Baroda, the net NPAs are somewhere around 1.58% only. So I don't think there would be any more pressure on the balance sheet size for these banks. And earnings over the next 2 years could grow at around 25%, 26%. So we think FY24, the book value could be somewhere around 180, and gradually the price to multiples could easily scale up to somewhere around 1 times at least. So I think she should hold on to Bank of Baroda for a target of around 180.
All right. Makes sense. So, Ms. Sivananda Devi, I think the writing is clear from both our experts. You can continue to hold on to Bank of Baroda, but on the other hand, you may have to, bear the losses that you've made in Coffee Day Enterprises. Perhaps maybe look at some other stocks like CCL products, etc. in this itself. With that, we move on. The next query comes in from Mumbai. Ankit Gupta writes to us. He holds about 15 shares of Tata Elxsi at 770 rupees. So he's sitting on a serious amount of profit. He's making profits in his investments, and how? 770 rupees turning into 10,600 rupees. The only regret that he will have is why did he not buy more? Well, he wants to know whether to stay invested or book his profits. Ruchit, what do you say to a person like this who's bought a stock at close to 800, the stock's gone almost 10,000 rupees odd, so it's near 10-12 bagger for him. Should he stay on holding that stock, or maybe at some point look at booking out and going to some other places where he can get a better return of this 1.5 lakh rupees that he's made?
I think within the IT space also, if you see, then the stock has been a good outperformer compared to other stocks too. So I think there is no reason why he should sell out. Although some short-term readings are overbought, but looking at his buying price, of course, he is seemed to be a long-term investor. And unless he needs that money, for some other purpose, I think he should continue to ride this trend and continue to hold on to his positions.
All right, Sharad, your thoughts?
No, I have a contrarian view. I think the valuations are a tad on the higher side, even though the EV Innovation Center with Renaissance and the type of work they have been doing in the automobile space and the type of improvement that we have seen in the numbers over the last 2-3 years, and even the expectation of improvement over the next 2-3 quarters in the numbers. If you consider everything together, I think the earnings are expected to be somewhere around 150 for FY25. Which would be an earnings CAGR of 16-17%. Considering that the stock is trading at somewhere around 70 times FY25 earnings, which I think leaves very little room for further appreciation. I may take it to a certain point beyond this, but I think it's better to sell and switch to something like a Cyient or LTTS, which are comparatively available at much lower valuations.
All right. That's the view coming in on Tata Elxsi. One says hold on, the other says maybe there are better opportunities with the money that you've made as well. Rajkumar Gokhale writes to us from Pune. He holds about 10 shares of Bajaj Finserv. He bought it at around 15,000 odd rupees, and 100 shares of Hindalco. He bought it at 325. On Bajaj Finserv, he's making a profit of almost 17,000 rupees. On Hindalco, around 11,000 rupees as well. So around 28,000 rupees is the profit that he's making on all these companies, both his investments out here rather. Though he's sitting on some drawdowns in Hindalco itself. Sharad, your thoughts on what he should be doing with these investment bets that he made?
I think Bajaj Finserv is a bit expensively valued. Most of the valuation is dependent on your valuations of Bajaj Finance, where I think the market is expecting the same type of growth momentum to continue that we have seen over the last 5-7 years. But I think the scale now is very different from the scale what was when the business grew from a 5,000 revenue to a 30-35,000 revenue company. So I think the scale is very different now, and it will not be as simple for the company to grow at the same rate. Considering that, we feel the valuation at 8.21 times FY25 book value for Bajaj Finance is a bit on the higher side, and I think a bit of correction to those multiples can happen over the next few years. So I think considering that, since 70-80% of the valuation of Bajaj Finserv is derived from Bajaj Finance only, so it's better that he exits Bajaj Finserv at these valuations. Hindalco, we think the valuations are not very expensive at this range. Though this is probably the only metal stock where leverage has not come down in the last 2 years in the post-COVID boom. But considering the type of improvement that we can expect on aluminium from electric car demand, that could be huge for aluminium. And Novelis has been doing some very good work regarding their product and the recycling process. So I think still 69% of the revenue comes from Novelis only. So that space could be good. I think Hindalco could grow at around, should have muted earnings over the next 2 years considering the metal price movements. But the earnings could be somewhere around 50 for FY24. So fair value for the stock should be somewhere around 500 considering 10 times kind of multiple. So I think Hindalco he can continue to hold for a target of somewhere around 500. Bajaj Finserv he can exit at current prices.
All right, makes sense there. Just keep an eye out on a couple of stocks as we speak. We are seeing some bit of recovery. The Nifty Bank has now moved back into the green, and that's led higher largely by Kotak Mahindra Bank as well as SBI. So both those stocks are doing well. And from the other parts of the frontline indices, we do see some recovery from the lows coming in on Reliance. So that's a heavyweight that's supporting the index, at least at the lower levels. We're seeing some gains come by on a couple of other stocks which are moving to the high point of trade. We do have Bharti Airtel, which has actually done well. In fact, in this week itself, the stock has rallied about 3.5 odd %. The company has gone ahead, made all their payments with regards to the 5G spectrum as well. They've been allocated that. Adani Ports is the other one which is doing well, up about 1% as we speak. The next query comes in from Bengaluru. We have Augustine Arimbu writing to us, holding about 200 shares of GAIL, which was bought at 123 odd rupees. A long-term investor wants to know whether to remain invested or not. Well, I'm looking at GAIL Ruchit here, and well, he is making some bit of money, but the stock has also, cut its gains from the top. It's down about 22% from its 52-week high, which as we speak was close around that 173, 174 level, and the stock is meandering around that 135 rupees. So he's making profits but sitting on a drawdown. What do the charts suggest